Western CPE is keeping you in the know this tax season with our Federal Tax Update program. Whether you choose to attend a live update, a convenient webcast, or take a self-study course, we have the format that works for you. Join us now for Reasonable Compensation and the Watson case.
Hi, I'm Sharon Kreider, and I have the pleasure of visiting with Vern Hoven. Vern Hoven is a CPA in Seattle, Washington. He's been named by CPA Magazine as one of the top 50 practitioners to know for an IRS audit. Vern speaks for CPA societies throughout the country and speaks for Western CPE's federal tax updates and is welcome. Hi, Vern. Hi, Vern.
Well, it's a pleasure being here with you. I understand you've got a difficult topic today.
Oh, I don't have a difficult topic. I'm just going to ask the questions you're going to answer with the difficult. I want to talk about reasonable compensation in the S corporation. It seems that everyone is talking about that in the IRS, in Treasury, in Congress, that we are, the practitioner community, or we, the shareholders in S corporations, are taking advantage of reasonable compensation to save FICA tax. Tell me about that.
Well, I mean, it's really pretty easy. Let's start with $100,000. Individual will have $20,000 of salary, $80,000 of dividends. You're going to be saving $7,600 of payroll tax by keeping it down to $20,000 instead of the $100,000. For the Internal Revenue Service, it's a really pretty easy audit. They just take the $80,000 that was dividends to the S Corp shareholder employee and flip it into wages and gross it up. So easy audit for the for the auditor, and quite a difficult argument for the taxpayer to make that $20,000 is reasonable when you've got $80,000 of dividends and you've got a $500 contribution into the stock.
How would I argue that it's reasonable for me, a CPA, in my S corporation to take $20,000 of wage and say everything else is dividend?
Now, you and I have done this before, and of course, we're on the opposite side. Each one of us argue the opposite side. I think it's a slam dunk for the S corporation to win that $20,000 is reasonable for two major reasons. Number one, up until the case I'm going to talk about, the David Watson case, the Internal Revenue Service had not successfully won an S Corp reasonable comp case except when the salary was zero and the entire profit was dividends. They'd never taken another S Corp case unless, the old line, pigs get fat, hogs get slaughtered. But this is the first time that we've seen the IRS even go to court with something above zero. And in this case, in the David Watson case, it was a $24,000 salary that he had paid himself.
Well, tell me about Watson, because I know the most important news right now in reasonable compensation is the David Watson case. Tell me about that.
David Watson is a CPA in Des Moines, Iowa. Operated as a sole S Corp shareholder for a tax preparation and financial company in Des Moines. The financial company would pay each one of the, and each one of the quote unquote partners had S Corp himself. And that's what he did. So he got 1 year, a little over 200,000, and the next year 175,000, and said 24,000. Salary, the rest was dividends. And the question is 24,000 reasonable compensation to a high-powered CPA in Des Moines, Iowa? The issue is, how do you determine reasonable comp? Remember, Sharon, that the Internal Revenue Service has absolutely no guidance as to determine reasonable compensation. There's no revenue rulings, no pronouncements, no regulations, nothing.
If they did, then that would be like a bright line test and we'd always pay just $1 over. I understand why the IRS wouldn't want to tell us how to do it.
Well, you understand, but I think it's their obligation too. If they're going to take us to court and increase it, what they can't do is operate behind a veil of secrecy. And that's what they're doing right now. No, they have an obligation, Sharon, to us, the preparer and the taxpayer, to tell us what that number is. And so we'll operate out of it. But in David Watson case, it turned out that It was the FICA wage base. The FICA wage base doesn't have anything to do with reasonable compensation. It is a revenue raiser for Social Security. What are the determinations? We have no guidance from the IRS, nothing from the regulations, nothing from Congress. Well, that left the courts to do it. And it's the Elliott standards. And in the Elliott standards, you really have a couple, 3 factors. There's 5 factors involved. And in an S corporation, the IRS only focuses on 1. What does somebody else make doing the same job? And the other 4 are skewed to come up with a result that the shareholder employee can pay anything that they want, is reasonable compensation. Because the Elliott factors were originally designed for S corporations, where the IRS is arguing to excessively high, or C corporations, I said S, excessively high, push it down. Now what are they doing? Oh, no, David, excessively low, push it up. Well, what's that? Speaking out of both sides of their mouths, we can't allow the IRS to do it. So my position is...
Excuse me.
Yeah, I know. Okay, what?
Do you do that if you have a C corporation? Do you raise the compensation? You, a practitioner doing a C corp, do you raise the compensation for the C corp and lower it for the S corp? You person talking out of 2 sides of your mouth, and I'm not making that horrible expression. Do you do that?
Of course I do.
Okay.
Because in a C corporation, I have $300,000 of C corp. I don't want to pay double taxation.
No.
And so I'm going to dump the entire thing. Boom, right smack in.
Because it's perfectly reasonable compensation.
Yeah, and then if it's an S corporation, I'm going to pay $24,000 to the same guy. Now, and there's no doubt that's what I'd be arguing with David Watson. Until the Internal Revenue Service gives us guidance, Sharon, that's the way it just has to be done. Now, let's go back to the David Watson fact. Let me wrap it up. The court used only 1 of the 5 Elliott factors. No court ever, not once. This is the first time used what someone else would make. They relied on just what the prevailing salary for comparable work. And the IRS brought an expert witness, Igor Ostrovsky. Igor. Now, I know an Igor. The last Igor did a transplant on Frankenstein's brain.
It didn't work well.
Didn't work well, I know. And so we've got the same problem here. He testified it was reasonable compensation, about $91,000. Oh, guess what? In 2002 and 2003, the Social Security wage base was, Sharon?
Oh, wild guess, 91,000?
88.5, and so basically, what do we see the strategy of the Internal Revenue Service? To maximize the Social Security wage base. It is being appealed. I did talk to David Watson, and it is being appealed, but he's using Code Section 161, and I want to use 162, the reasonable compensation, all of the S corporations. So he's going to carve out a little. He's arguing the IRS doesn't even have the authority to recharacterize. He's going to lose that argument. But I'm hoping that the Court of Appeals also uses the Elliott factors, because I don't want the standard to be the Social Security wage base.
All right, so let me just summarize Watson then. So what you've told me is Watson had $200,000 coming into his S corporation.
Yes.
And he said reasonable compensation was $24,000.
Yes.
And the court said $91,000,
Right.
which coincidentally was reasonable wage and the FICA wage base.
Now, please understand, of the $200,000, the IRS agent had recharacterized most of it 1 year and all of it the other year into David. So that was reduced down. When the IRS got to court, they had reduced it from $175,000 down to $67,000, which 67 and 24 made that $91,000.
All right, so now I just want to get back to maybe someone who's not quite as aggressive as Watson or his representative, Vern Hoven. I want to talk about somebody who's just normal. He has $100,000 of Schedule C income. So at $100,000, and forgive me for nice round numbers, but he pays about $15,000 of self-employment tax on $100,000 on his Schedule C. If he incorporated, chose the S corporation, made an S corporation election, and we said it was $20,000 dividend and $80,000 of wage.
I know where you're going.
All right, now I save about $3,000 of FICA tax.
Right.
I don't think I've been extraordinary in what I've suggested or what the client has deemed reasonable wage versus dividend. But is there any other advantage inside of the S corporation besides taking part of that profit and calling it dividend distribution? What else inside of the S corporation might help him with his FICA liability?
Can I get personal here?
Sure.
I'm going to talk about my own.
Mm-hmm.
I am an S corporation, and I clearly do understand how to save on Social Security. I pay the max Social Security. As a matter of fact, I pay myself out of my own S corporation $225,000. Why am I doing that? I'm paying the max Social Security and extra Medicare. Well, it's pretty easy. And the rest is dividend. I'm not saying that. I'm doing that. I'm doing it from a retirement. I'm at the age that saving Social Security is a short-term benefit, but I have to make sure that I get 40 years of good pay into Social Security. So when I do retire in about 10 years, that I'm going to have made get the maximum Social Security. I have now for the last 20 years been maximizing my retirement plan. And so the dividends is a detriment. It's a short-term detriment. David Watson is not going to have Social Security or pension when he retires, when he wants to retire. And of course, in the health insurance in an S corporation, I'm going to make sure I get reimbursed under Revenue Procedure 2008-1.
Could be.
No, it is. I know that you know that one. Is I'm going to make sure that the S corporation is properly paying the health insurance, because wow, what a great benefit that's going to end up being. I put it in box 1, but not box 3, 5. No FICA, no feud. I'm saving $10,000. Of course, that's the amount above $106,800 that I've just reduced down, and I've got it as a deduction, self-employed health insurance.
All right, so stop there, because we sort of got off my example. So I started with $100,000 of wage.
Yep.
I took off $20,000 of dividends, and now let's say it's $10,000 of health insurance. I take $10,000 of health insurance
Absolutely,
off.
it's going to be. You're going to have $10,000. Now you're going to have $80,000 of W-2 income. But on line 29, you're going to have another $10,000 deduction. You do that one, right?
Well, I got the deduction whether I was a Schedule C, self-employed health insurance, or if it's an S corp. The difference is the FICA tax, right?
Oh yeah, I mean, for the self-employed. In the S corporation, it's no box 3 or 5, no FICA or no.
On the W-2, it's no box 3 or it's.
Absolutely, and I like that better.
All right, so I saved another $1,530,
$1,530 saving on $10,000.
On running it through an S corp.
Yep.
Then one more, because you mentioned the pension. So if I've been accustomed to earning $100,000 on my Schedule C and putting $10,000 into a pension plan,
okay.
I still paid the full self-employment tax on my $100,000 and put $10,000 into my pension plan. I'm in an S corp, and I put the $10,000 into a pension plan that's pre-FICA.
It is. It is
so
pre-FICA.
now, if I could do $20,000 of dividends, $10,000 of health insurance, and $10,000 of pension, I've saved myself $6,000 of FICA tax, and I don't have a court case that's Watson versus the commissioner. I've been pretty reasonable in my numbers, right?
And
am I?
I'm pretty reasonable in the numbers, and at the same time, where he saved $24,000, I'm already at your numbers at $64,000, and you're getting really close to reasonable comp for a CPA in Des Moines, Iowa. Mm-hmm. So, I mean, I think that there's lots of arguments to be made that I can get, not maybe as low as $24,000, but I can get to use a lot of benefits in the S corporation. It's a good vehicle. It's a good choice of entity.
And whether we agree that Watson should have been done at $24,000 or up higher, we do agree that the S corporation is a good vehicle for saving some FICA tax in a conservative or an aggressive way.
Not only am I going to agree with you on that, 30 years ago when I started the business, 67% of the corporate filings were C Corp. It's exactly the opposite. 65% are now S Corps. Why? Hey, it's the benefits of the S Corp, payroll tax, and all the rest of the items.
Tell me your best idea for an S corporation reasonable compensation.
The best idea, and I don't know if anybody's going to like this one, is to understand that if you pay something that makes you wink, if you're paying such a low salary that you can't keep a smile off your face, then I think you need to look at the 5 Elliott standards and prepare a defense of answering those 5. I think you can comfortably support the $24,000. If I was representing David Watson, it would have been interesting. I would have loved to do that. I would have used the Elliott standards. But I think that if you either can't sleep well or if you smirk, time to look at the 5 Elliott factors.
Thank you, Vern. We've been talking to Vern Hoven today, a CPA from Seattle, Washington, about reasonable compensation and particularly about the David Watson case. If you've enjoyed our little snippet on best tax ideas in a webcast, we hope you'll join us in webcasts at Western CPE. Vern Hoven has a webcast that is a 2-day federal tax update that's broadcast everywhere, every time. Isn't that right, Vern?
Oh, at least, I think that the 16 hours is four different segments, and you can take it every week. One of the 4 segments, Monday, Tuesday, Wednesday, or Thursday.
Vern Hoven is part of Western CPE's live federal tax updates at 32 locations across the United States. If you can't travel, we offer convenient webcasts broken into 4-hour sections. Also, our renowned DVD collection featuring Vern Hoven allows you to stop and start your federal tax update on your own schedule. Your CPE, your way. Visit us online at westerncpe.com or call 800-822-4194.